All right, welcome back, guys. We're going to be taking a look at starting and beginning our adjustments. So last week, we computed our trial balance, which we end up being successful, right? So that means we've been doing the accounting correctly. So now it's time to start doing our adjustments, okay? And then doing our adjusted trial balance. Then tomorrow or maybe the next day, we'll go ahead and dive right into the financial statements, okay? So in this case, let's go ahead and take a look at this transaction here. So here on June 30th, we're going to start to begin closing our our accounting period and doing our adjustments. So therefore, this is the beginning stages of the last 5 steps of the accounting cycle, right? Okay, so here we're going to begin with doing our adjustments. So the first adjustment that we have here is going to be for the periodic inventory. We are going to finally complete our conversion entry for our inventory, okay? And in this case, our journal, it has exactly enough lines to go ahead and compute or at least be able to journalize the conversion entry, okay? So first things first is, let's take a look. It says that the ending inventory, okay, balance is that for the ceramic coffee cups, coffee mugs, we have 106 coffee mugs left on hand. All right. So this is where we're going to go ahead and dive right into our inventory worksheet. Okay. We're going to go to coffee mugs, right? And now let's go ahead and do our conversion, right? Because we have the key information that our ending balance quantity is going to be 106 cups. All right. All right. So if you guys remember, let's go ahead and complete the rest of this table. So anybody want to take it away? What do we need to do first?
You have to total your quantity, purchase, freight.
Good. So we're going to start off with summing up our total columns right here. Okay. So let's see. What was the total amount of coffee mugs that we actually purchased?
440.
440. Okay. What was the total purchase price?
I got 1,092.20.
$1,092.20. Good. Okay. What was my total freight?
500.
Okay. Oops. Let me fix that real quick. I have to split this up. Okay. So then you said 500? Oh, what the heck is going on?
I was going to ask the same thing. Why is it splitting?
Okay, so maybe I'll just type it in. So this was 1,092.20, you said?
Mhm.
This is 500. Okay, what's the next one?
1592.20.
1592.20. And here we don't solve for our average cost yet, just because we have a few things that we know to not be true, which is, we have some purchase returns and allowances. So let's go ahead and plug those numbers in here, right? We have a total quantity of 440, right, at a total cost of 1,092.20. Okay. So then, what was our total purchase returns and allowances? How many items did we end up returning?
That should be 9.
Should be 9.
9.
At a total cost of
$4.94.
okay, not that column, the next column. Total cost.
Okay. $22.24.
Excellent. So because this is our purchase returns and allowances, we're going to copy this information over here, right? Because in this case, we started out with 440, but we end up returning 9 of those items, right? So in this case, what is our subtotal?
$431.
431. Good.
Yes.
And then what is the total cost here? If I end up returning $22.24 worth.
$11.14.44.
You added.
Oops. Oh, okay. Subtract it.
Uh-huh.
$10.69.96.
Good. Okay. So then right here, we have to add our freight. We know that freight doesn't add to quantity, but it adds to cost. So we need to add our $500. Okay. So then what is our total net purchases?
The 431.
Okay, total net purchases.
10, 92, 2684.40.
Wait, what? Okay, do that
Got it,
again.
everything.
It's the freight. I was supposed to subtract the freight.
No, you're supposed to add the freight.
92.20 plus the 22.24.
You don't need to add 22.24. You already subtracted that out.
Yeah, so that's 1569.96.
Good.
There we go.
Okay. So that's your total net purchases. Okay. Now in this case, did we have beginning inventory?
No.
No, we don't have beginning inventory. Okay. We got to copy down our information that we saw for our net purchases. And that's going to become our goods available, right? You're going to add to the beginning, but in this case, we have no beginning. So whatever your net purchases is going to be determined as your goods available. Okay. So we have a total of 431 items, okay, at a grand total of 1569.20. Oh, sorry, it's 1569.96. Okay. So then, So what inventory costing method am I using for my coffee
Weighted
mugs?
average.
We're doing weighted average, okay? So now we need to solve for our average cost per item. How do I do that?
Multiply the cost by the quantity.
No. What cost do you have? What do you know?
The total cost is the 1569.96.
Okay. Total cost is the 15. Okay, good.
1569.96. And so divide that by the 431.
Excellent. And that gives you your average cost per item. Good. And what do you get?
I get 3.64259860, blah, blah, blah.
That's excellent.
Okay.
Good. That's correct. So that means every time you sell yes, do not round it yet. So in this case, every time you sell a cup, it's going to cost you $3.642599. Okay? So in this case, right, if I started out with $431 mugs in my inventory and now I only have 106 left, how many did I sell?
$3.25.
325 mugs. I sold 325 mugs. Okay? So now, if I sold 325 mugs, right, at $3.642599, how much is my total cost of goods sold?
I got 1183.844675.
Kim, do you have your fan on?
Yeah, I do. I'm sorry.
Okay. All right. 1183.84. Is that, you said something like that, right?
1183.844675. Yeah.
Correct. So that means you sold a total of $1,183.84. Okay. So then, how much should my ending inventory be?
The 1183.84.
That's
No.
that's the cost of your what you sold.
Oh. So what should your ending? What? Repeat the question.
What is going to be the total cost of your ending balance? So what's the total cost of 106 items?
What's the total? Okay. Oh, okay. I got it. Wait. 15, 96 minus 0.84. 386.12.
$386.12. Good. Good. Right? So now we have everything we need to complete our conversion entry. Okay? We have everything that we need to complete our conversion entry, right? We have all the numbers. So let's go ahead and take this information and plug it into our journal. All right. It is 6:30. Excuse me. It is 6:30. So what is going to be the journals entries that I'm going to be placing in? I'm converting my purchase expense into inventory. So what's the first thing I should recognize?
Okay, so you're converting your expense into inventory. Inventory would be assets, right?
Correct? So under the inventory asset, is there a specific account?
Yeah. Where's my chart of accounts? I don't have my chart of account handy. Oh. I'm sorry. Somebody else gonna have to answer that because I don't see my chart of account. Oh, let me pull it up. I could do that.
Yes.
That must be in Word.
Are you using Excel? It's in
Yeah,
it's
I
in your
have it.
general journal.
Okay. General Journal. Here it is. A chart of accounts right there. So you said under inventory,
Uh-huh.
inventory operating. Inventory. I got the regular coffee and supreme coffee ceramic cups
So which one are you going to be taking?
for regular coffee.
Are
Oh,
we
there you go. You got it.
okay?
So what's the question again? Sorry, I got lost.
What when you're doing your conversion entry, what are we converting?
You're converting your inventory
Right, which is what?
assets.
Okay. What particular item are we converting?
Particular item is I don't know. Which
So
one is the I don't know. Which particular item are you converting?
what did we buy on a purchase expense?
We bought coffee.
We bought coffee on perpetual inventory.
Oh, on the weighted average, is that what you mean?
No, I'm asking you
I'm,
what item are we converting?
I don't know. I don't. What item are you converting? Can you give me a hint or something? Because I don't know.
Okay, so we have three inventories that we purchase, right? We buy regular coffee and supreme coffee. What's the other item we buy?
The mugs, the coffee mugs.
Yes. So what account am I going to be using if I'm converting my
The
purchase
coffee
expense?
mugs.
The ceramic coffee mugs. Yes.
The coffee mugs. Okay.
Yes, that's what we were doing in the inventory worksheet. So here, I'm recognizing that we have ceramic
So,
coffee mugs.
okay, I got it.
Okay,
So your
so
first account would be the ceramic coffee mugs.
Correct. Okay. What
Okay.
else am I going to recognize?
You're going to recognize the your cost of your goods sold.
Cost of goods sold. Okay. What account? What account is that called for this
Um,
specific account?
What was your question again?
So she answered the question right that we're looking at a cost of goods sold. My question is, what particular account are we looking at? Cost of goods sold.
the 50150.
50150. Good. Which is what? Cost of goods sold for ceramic coffee mugs. Good.
No, it's okay.
COGS. Which is account number 50150. Good. What else are we going to be recognizing?
Mm,
Purchase returns and allowances?
Purchase returns and allowances. Good. Because we ended up returning some of those coffee mugs, so we don't actually have them anymore. So purchase returns and allowances. Okay. $61,500. Okay. What else are we going to also be recognizing?
Our purchase expense and freight expense.
Excellent, because that's the purpose of this journal right here is to convert everything we have in our purchase expense and our freight expense, and we're converting it into inventory and our cost of goods sold. So you got purchase expense and you got freight. So purchase expense is account number 61,000, and I believe your freight should be 6,300. Let's double check. Freight expense is 6,300. Okay. So, what numbers are we going to be plugging into each one? How much of the inventory for ceramic coffee mugs are we going to actually be debiting?
$386.12.
$386.12.
So that's the cost of goods sold on our inventory.
That's our ending inventory.
Mm-hmm.
So what's the cost of goods sold for their ending inventory? I mean, sorry, what's the cost of goods sold of the coffee mugs that we sold? What's the
1,183.84.
1,083.84? Good. What about my returns and allowances? How much was that?
$22.24.
Good. What was the total cost of my original purchase?
$1,092.20.
1,092.20. Good.
And 500 for the freight.
Good. 1092.20 and 500. Now let's go ahead and double check that our debits match our credits here and that we didn't leave any information out. So I got a total of 1592.20 on the left and a total of 1592.20 on the right. Okay, so there you go. We successfully finished our conversion entry. So let's go ahead and wrap up this little note here. What do you want to say?
Would it be okay to say just conversion entry for mugs?
Yep, perfect. Conversion entry for coffee mugs. Good. So what always comes after the journal?
The ledger.
We're gonna go ahead and update our ledger. Okay. So first thing we have here is inventory, which is an asset. Okay, ceramic coffee mugs. What do you want to say here?
Could we just put like ending balance or June ending balance?
You could do that. I'm going to go ahead and make sure I put this as an adjustment entry.
Ah,
Ending balance. How many coffee mugs do you have left? One oh six mugs. Okay. Post reference. General journal number 21. Okay. My debit balance is 386 and 12 cents, which is going to be my debit balance. Okay. So then, next thing we're going to do is go to our cost of goods sold. And this side we have our cost of goods sold for the ceramic coffee mugs. So what do you want to put as the note here?
Can you just do like sold 325 mugs?
Good. So making sure, so I put adjustment, sold,
So it's
300.
preferable to note adjustment. That
You-
is that is not this entry is an adjustment.
Correct. Just because, like, so then you can make a difference. Why is it on the 30th that you added this in here? It's not a regular journal entry. This is an adjustment entry. Okay. So, because we're making an adjustment, right? We're adjusting inventory. So in this case, sold 325 mugs. Okay. Post reference, once again, General Journal 21. And it's going to be a debit for 118384, which is going to be our debit balance here for 118384.
Is this what we waited until the end to enter the coffee mug so we can just do the adjustment instead of keeping track like we did on the coffee?
Yes, and that's what we do, because the idea here is that we don't take a physical count until the end of the month. So if we took it every week, then we would have to adjust it every week. But in this case, this is an adjustment entry at the end of the accounting period. You must, convert from a purchase expense to your to inventory, because you have to recognize that we do have inventory, right? And this is how you do it.
And this is just because it's the system that we're using, but it
Correct.
can be whatever. In real life, it can be whatever method, right?
Correct. So, yes, like just exactly like this, right? If I want to keep track of my coffees as periodic, I could. If I want to keep my ceramic coffee mugs as perpetual, I could. Every item that you sell doesn't have to be one or the other. You can have
It's whatever works for the business.
Correct. And in this case, our main goal isn't to sell the coffee cups. We're trying to sell the coffee because we're using it. So that's definitely something we definitely want to make sure we keep track of, because if we're low on coffee, right, then our business is going to be in trouble. Whereas the ceramic coffee mugs they're just bonuses. Like, oh, we sold a coffee cup, cool. Kind of thing.
I see. Thank you.
Okay. So then what's the next entry that we have to do here?
Purchase or return and allowance.
Purchase returns and allowances. So that's going to be under operating expenses. Oh, whoops, went a little too far. So here's purchase returns and allowances. What do you want to say here?
An adjustment for 9 mugs? Or adjustment entry, 9 mugs?
Oh yeah, okay, yeah, we can do that. So we could say adjustment 9 months, General Journal 21, okay? And it's going to be for $22.24. So therefore, what is our account balance going to be?
0.
0. Yes. Yes. We're going to make it 0. Good. So then what's our next account here?
Purchase expense?
Uh-huh. And in this one, you could go ahead and just make this an adjustment entry conversion to inventory. For General Journal 21. And this time we're going to credit our account for the 1092.20, which once again is going to bring our account balance down to
0.
0. Good. So if you guys remember that conversation when we had back when we learned about periodic inventory, right? When you do your conversion entry, you're essentially taking the bucket that you put all your items in and you're dumping them out. You're zeroing them out and you're converting them out into inventory and cost of goods sold. So that's exactly what we're doing. We're zeroing out our accounts to reflect that we are converting or transferring our amounts and we're dividing it amongst our purchase returns, our inventory, as well as our cost of goods sold because we end up returning stuff, we end up selling stuff, and then this is what we have left. Okay. So good. Now, last but not least, we need to go to our freight. 630. Adjustment conversion to inventory. General Journal number 21. And this time we're going to credit $500 to bring our account balance down to 0. And that is it. Right? Periodic inventory, right? When we make our conversion entry, it doesn't involve anybody. So in this case, that is, we are done with this transaction and we completed our worksheet here. So therefore, you can save your inventory worksheet because we are done with it. We're not going to use it anymore because we've already completed our conversion entry. Our regular and our Supreme Coffee, we already have that already in my inventory. So I don't need to use my inventory worksheet anymore from here on out. So I can go ahead and close this out if I'd like, if you want to. Right? So next things next here, right? So we're starting on a new page here in our journal. And let's see what happened here. So on June 30th, we decided to look at the cost of materials. So in grand total, for the medium coffee cups, right? If you've kept track of it in your ledger, you should get a grand total of 5,297 cups sold, right? And same thing for the large coffee mugs, or sorry, coffee cups. We sold a total of $4,331. And for the sugar, we used 120 pounds. And then for the coffee creamer, we used 22 cases. Okay. Now I've already broken up the cost per item already for you by taking the cups and dividing it by and adding obviously the uh, the tax to it to get each individual cup. So every cup that I sell will cost me a total of 5.42 right? So here I've already calculated the total for you so you don't have to do it yourself. So here in grand total, I calculated I used a total of $286.70 of the medium coffee cups. The large coffee cups, I used $351.63. And I've also used $43.20 of sugar and $359.26 worth of creamer. So here, right, I already done the calculation for you. So now the question is, how do I journalize this?
Okay, so you are asking us to figure out the cost of materials sold. Do we have an account for that?
That's a good question, do we?
Yeah, it's under expenses.
Good.
Okay, so you give us medium coffee, large coffee, sugar, and creamer. Okay, so
Good.
we have a cost for all that.
Good. Now, in this case, right, you can journalize individually each and every single one. But in this case, you can go ahead and list them all out because at the end of the day, they all are part of the one journal here. So you can just go ahead and list out every single cost of material account here. So first one we have here.
The cost of material, medium coffee.
Good.
Cups.
Yep. So COM for cost of material. Medium. Go ahead.
Medium coffee cups.
Excuse me. Medium
And
coffee cups for account number 50.
no, it's 51200.
Good. Okay.
And then the same for large coffee cups.
Excuse me.
51 to 50.
51 to 50.
And then sugar. 51 300. Creamer is 51 350.
Okay. Perfect. All right.
And so the cost is going to be the total cost, right? What we're going to put in there.
Yep. Yep. So I already calculated it for you. Okay. So let's go ahead and figure these numbers out. Or actually, sorry, I already figured the number out for you. So you just have to type it in basically. So in this case, my total for my cost of material for the medium coffee cups is?
Okay, so expenses increased by a debit. So we're going to debit 286.70.
Good. What about my medium? What about my large coffee cups?
351.63.
And my sugar?
43.20.
And my creamer?
359.26.
Okay. So then what accounts am I going to, excuse me, what accounts am I going to be taking these directly out from.
Which is inventory, correct?
It's not inventory.
Oh. Well, I'll say the same: medium coffee, large coffee, sugar and creamer.
Exactly. We said that we made a purchase of all of these coffee cups. Now this is the adjustment because we end up selling 5,297 of the medium cups, $4,331 31 cups of the large cups, and 20 pounds of sugar. So in this case, we need to adjust our business supplies because in our business supplies right now, it shows that we have all of it, but we really don't. So that's what this adjustment entry is going to do. It's going to reduce it because we used it, right? So in this case, you're going to list out medium coffee cups, your large coffee cups, your sugar, and your creamer.
So your business supplies can also be your invent. No, do we have inventory for that?
In this case, you can if you'd like. It's just not really something that, in this case, I don't find like keeping track of all the coffee cups that you
Oh,
have
that's right.
as much very important because it's going to be expensive at the end of the day. Like, but if you want to, you can treat this as inventory. There's nothing wrong with that. So then at least you know how much per pound you're going to like figure out and how much you use per coffee. But once again, if you're going to be using these items for inventory, how would you keep track of it? Would you tailor it as a periodic or perpetual type of inventory?
No, my mind just goes to that because that was the pattern that we were following. But I
Mm-hmm.
see what you're saying. It's not inventory, it's more of business supplies. So
Exactly. Exactly. Unless you want to spend all day counting exact every single grain of
sugar
sugar.
and creamer, yeah.
Exactly. Then that would more so be so then yes, you should be able to use the business supplies as inventory. But in this
Mhm.
case, no. I can just go to the back and be like, okay, well I only have like 5 bags left and each bag is 1 pound, right? Okay, there you go. That's simple and quick for you to know.
Mhm.
So instead of having to count it every single time we sell a coffee, right? Then you could constitute it that way. But you can technically use it as inventory. It's just in this case, you guys already know how exhausting it was just to go through inventory itself.
Yeah.
Okay.
Okay. So
So
medium coffee
uh-huh.
cups, the code is
7
11.
11 7 760.
Yeah.
11 765, 11 770, and 11 775.
Hmm.
Okay, perfect. Okay, and of course, they're all going to be credited the same amounts here. Okay. So now that we have this, right, what do you want to say here for your note?
Could it be also adjustment?
Mm-hmm. To adjust business supplies. Simple as that. Okay. So now let's go ahead and actually adjust our business supplies by placing it into our ledger so we can actually see where the coffee cups went. Okay, so in this case, first thing we're going to do is go to cost of goods sold because I made this account, right? We have cost of goods sold, and then we have another section called cost of materials. Okay, so here we are, cost of materials. We have here um, the medium coffee cups. Okay, so it's up to you how specific you want to place it here. if you want to say under here that we sold a total of 5,295 cups, you could do that. So I'm going to make adjustment. Sold 5,297. Yes, 5,297 cups. And this was for $286.70. Next, what we're going to need to do is going to be our large coffee cups. So 630, adjustment, sold 4,331 cups for a total amount of
351.63.
35163. Okay. We need to also adjust our sugar. How many pounds of sugar did we use?
120.
120
120.
pounds. For a total of $43.20. Okay. Last but not least, we used the coffee creamers. So adjustment, used. How many cases of coffee creamer did we use?
22.
We used 22 cases, which is, as we know, a 12-pack. For a total cost of
$359.26.
$359.26, which is going to be our account balances. So now let's officially update our business supplies, because now we have a grand total, right, of all these coffee cups that we purchased. But now we're going to add our adjustment because we no longer have these coffee cups available, right? So here, adjustment, and we sold 5,297 cups. So in this case, right, if you want to, you can also have your ending balance of how many cups you have left. Ending balance. So in this case, we purchased 1,000 plus 2,000 makes you 3,000, plus another 2,000 makes 5,000, plus another 2,000 gives you 7,000. And we sold 5,297 of them. So how many cups should you have left?
1703.
1,703 cups remaining. This is crucial information, especially when we start if you do start, if you when we do have a second month worth of uh, information, and you have to start your ledger all over again. This is crucial information, so you know what you begin with, so then you can, as you make your purchases and stuff, right? It adds up and totals up, so that when you do your ending balance once more again, or when you do your conversion entry for cost of materials, then you'll have a clear idea of what you began with and what you end with. Okay? And this time we're going to credit for $286.70. So how much is going to be your total balance here?
$92.17.
$92.17. Okay? That is their total for your 1,703 cups remaining. It's going to give you a total of $92.17. So does this make sense? Why we need to do a cost of material or make an adjustment here? Yes? Right?
Yes.
So,
Kind of.
yes, right? Because at the end of the day, right? You can't say that I still have 7,000 cups left on hand. No, because when you're every single day that you sell a coffee cup, you sell one coffee cup. So in this case, right, as we make our adjustment at the end of the period, right, now we are realizing how much cups do we actually have. Now in this case, of course, we never kept track of it, right? But it's pretty obvious, right? Every time you sell a coffee cup, you have to go to the, the storage in the back, right, of the store and bring out a new set of cups. So it's pretty obvious when you keep track of it, right? Because you notice, oh, I opened up a new box. Oh, I'm using another coffee cup. Oh, how much do I have left? Right? It's pretty straightforward. Okay, so here I'm going to make an adjustment entry, and I sold a total of 4,331 cups. So I should have an ending balance, okay, so same thing here, 1,000 plus 2,000 plus 2,000 plus 2,000 gives you 7,000 cups. So if I sold 4,331 cups, how much should I have how many should I have available left?
26.69.
26.69 cups remaining. General Journal, once again, 22. Okay. And this time, the total cost of this was $351.63. $351.63. So then that brings my account balance down to
267.
$216.70. Good. So here, sugar, adjustment. How many pounds did we use? I think it's
20.
okay. So ending balance. So let's see, 60 plus 60 plus 60 gives you 180. If I used 120 pounds, how many pounds should I have remaining?
60.
Yes, 60 pounds remaining. General Journal 22. And we're going to subtract $43 and 20 cents. Okay, so what is my account balance going to be?
2160.
2160. Good. Last but not least, right? This is 630. Okay, adjustment once again. How many cases did we use? Did we use 22 cases, right?
Yeah.
Okay. So that means my ending balance should be, let's see, what's 15 plus 15 plus 3? I believe that's 33. If we use 22 cases, how many cases should we have remaining?
11.
11 cases remaining. General Journal 22, and the total amount of the cases is going to be 35926. 35926. So therefore, what should be my ending balance in my Creamer account?
I got one.
179,
Go ahead, Nathan.
179.63.
179.63. Okay, so that tells me I have 11 cases left on hand, which is a 12 pack each, right? This is how much I should have at the end of June 30th, right? I don't have all 33 cases. I only have 11 left remaining in my supplies, right? And because this doesn't involve anybody except for, this is an internal transaction, therefore, I don't need to use a subsidiary ledger. So I am done with this transaction. Okay. So far, so good?
I have a question.
Go for it.
Just looking at the transactions that we're gonna be working on today.
Uh-huh.
So there's gonna be several accounts that we didn't pay, like the coffee, like vendors, several vendors and stuff that we didn't process any payments and stuff, right?
Yes.
Okay,
Yes.
thank you.
Uh-huh. So yeah, most of these are going to be internal transactions because you're adjusting the books internally, right? You're not going to be dealing with any vendors or any credits, any customers or anything like that. But there are a few things that you do need to have the subsidiary ledger open for, such as payroll. All right, payroll is going to be a huge one, right?
Okay.
So it is exactly 10:08. I'm going to round that to 10:10. So go ahead and take your 20-minute break. So please be back no later than 10:30. And we'll continue on with our adjustments, okay? See you back then.